Good morning. It's Friday, 10 a.m. here in Central Europe. That means Jonatan and I, we are live once again for another episode of Satoshi Secrets, where we will talk about our recent trades, what's going on the crypto markets. And yeah, I mean, it has been quite a week. How are you doing, Jonatan?
Okay, so I need to. It's my internet connection. I think is very, very bad. So can you hear me? You can hear me, right?
We can hear you, but I think there's a much large delay.
Okay, so what I need to do is I need to see if I can switch. I got a VPN running, so I'm just going to see if I can switch my VPN to another location. See if that works better. It might cut off with the connection here for a while, but let's.
That's okay. If it cuts off, I'll just start. Yeah, everybody out there, whether you are watching on Twitter, whether you are watching on YouTube, on Jonatan channel, or on Twitch right now, good to see all of you. Feel free to drop some messages in the chat. We're going to talk, of course, today about what happened this week, not only on the crypto markets, but on the stock markets. Obviously, we had an interest rate cut from the Federal Reserve Bank down to 5.25%, and he's back.
Okay, is it better?
I think so. I think the delay is gone, right?
Nice, yeah.
Yeah,
think
that's
so.
much better, much better.
Oh,
okay,
great.
Welcome
Okay,
back. Good. That it was a bit awkward. Like I say something and then like,
yeah, that was really laggy, but it's probably just the VPN.
Yeah, probably. Yeah.
All right, good to be back.
So as I said just now, we want to talk, of course, today primarily about what happened this week on the markets, not only on the crypto markets. I think the interest rate cut we've seen here from the Fed is affecting all the markets, all the risk on markets, all the risk off markets. So I did a little bit of research on that. Want to share kind of my strategy, how to deal with this, how to go forward, what's probably going to happen next for the rest of the year, the beginning of 2025 also. I would like to talk, of course, a little bit about my trading system. So the market equilibrium indicator, very interesting developments there. We had a very strong period, and then we had a little bit of drawdown the last 1 day or 2 days, actually. So I want to share with you how did the system deal with a period like this, how you can approach something like this, because it's a good lesson in risk management as well. So how by the end of the day, did I not only survive this with an automatic system, but the way I set up the system, make sure that I don't lose everything that I, in the 2 weeks prior to this, gained already with the system. And I'm very sure you have a bunch of things to talk about as well, Jonatan. What do you think we should start with today?
Well, I think it would be interesting to talk about perhaps the now that the Fed has come out with 0.5% interest rate cut, and how that potentially is changing the outlook going forward here. And I'm a bit interested in what you have on your screen right now. I see that you have the S&P 500 as blue, but what's that orange line there?
The orange line is the US interest rate. So you can see here right now, orange line going down now because we had this rate cut, which surprisingly was higher than most of the market participants expected. So the expectation was 25 basis points, but we saw 50 basis points, so higher than expected. Of course, the markets celebrate this. I mean, we had huge moves, not only in Bitcoin, which we saw jumping up to, now it's at 63,500 US dollars. We saw the same, of course, in stocks, especially since Jerome Powell also said, hey, this is probably not going to be the last interest rate cut. So the Fed is really trying to be more proactive than it was in the past. One of the big criticism in this interest rate cycle that brought us up from 0% to 5.25% was that the Fed was like reacting too late to inflation. And I think now they want to go the opposite way. They see like, oh, the job market is actually performing worse than expected. So we should be a little bit proactive, because with interest rate cuts obviously always take time until you really see an effect on the job market. Like you can for sure have a time span of at least 3 months up to 1 year until you really see the economic effects of something like this. For me, of course, very interesting is always what happened the last times we saw interest rate cuts. And actually, the first reaction in the week directly after interest rate cuts is not a very good one. So the last time this happened in 2019, and there we saw, obviously due to COVID also, the market eventually declining from the time of the interest rate cut until the very low by 32%. Yeah, we had like COVID as a minor effect, so to say here. Nonetheless, we saw the markets declining. And we saw the same here back in 2008 during the financial crisis. We saw the markets first declining by 58%. We saw the same here when the internet bubble popped in the beginning of the 2000s. We saw markets declining by 50 or 49%. So you'll read now probably very often on social media that, well, the last time this happened, so we should see a decline probably now somewhere up to 50%, which obviously would bring us down to, what is that, if we really see something like 50% to, let's say, 3,000 points in the S&P 500 or 2,800 points. However, I do not think that is the case, like I said, because before that we had really like dramatic things going on the market. We had the dot-com bubble busting, which destroyed large parts of the US economy back in the 2000s. We had 2008, the financial market crisis that was, so to say, the cause for lowering interest rates, where almost, the world banking system collapsed. And we saw with a delayed effect here the same with COVID. And I think what we are now seeing is more a return to normality. We had the high inflation. That's why interest rates went up so far. And now we are going slowly into more normal territory, which probably is going to end up somewhere around 2% again. And yeah, everybody's talking about recession now in the USA. I don't see it coming, honestly. I think what we're seeing right now is going, with a lot of volatility, going to be the initial ignition, so to say, for what I have been talking about for so long, for the super bull market for the next year in Bitcoin and in stocks also. I think we're going to see, with a little bit of volatility, so don't scold me if we go down first by 10 or 20%. That can happen, of course. But I think if we look back next year at this stream, we are probably going to say something like, wow, back then were still good prices to buy. Yeah, that's my opinion. I don't know how do you see it?
So I think there's one thing that first thing that I'm thinking about here. Well, we can go back to your screen actually.
All right.
And look at the you had a couple of sessions marked out here as the green vertical line, and you said the week or the time after the interest rate cut, we usually see quite a bad period in risk assets. And in this example, the risk assets are sorry, excuse me, the S&P 500. So what I'm looking at is the most previous example is COVID, and the one before that is the market crash of 2008. And the one before that is the dot-com or the internet bubble.
Yeah.
So that's I would call that, that would definitely be type of black swan events, especially COVID. Now, what I'm thinking is we're not seeing anything like that this time around. So I think that, excuse me, I needed some water. I think that the drops, like the interest rate cuts previously came because of severe economic situations. The interest rate cuts that are coming now is because the Fed has done what they're supposed to be doing with the increase in interest rates. So I think now we're cutting rates because we want to get back to normal. Before, we were cutting rates because we had a very serious very serious problem, and we're not seeing those serious problems right now. So I don't think we're looking for a lot of people are talking about the fact that the Fed knows something that we don't know. Like the Fed knows what we know. Like the financial experts out there, they probably know the same or not more than what the Fed actually knows. So I don't think the Fed knows anything that we don't know. I think the Fed is working with the same information that is publicly available out there. So I think that we are going to continue this bull run that we're on. I think we're going to see maybe a pullback. Maybe we will see that this current move that we had up to the upside, S&P 500 breaking to news highs. We're going to look at Bitcoin as well, and Bitcoin broke above certain important resistance areas. And I don't see a reason for this not to continue unless there's another black swan event, which would not coincide with what we're seeing historically, because what happened historically is we have a black swan event and then we cut rates. We don't cut rates before that happens. It's not like the Fed did not cut rates before before the economic collapse in 2008. They cut rate because of that.
That's why I said they are proactive this time. You're absolutely right. The last 3 times they had to react to, what was really a black swan event. And like I said, these rate cuts, also rate hikes, of course, they take time to take effect. I mean, we've been raising rates now for 4 years almost, and it took like 2 years until you really saw the effects on inflation. And so for me, it's like what they are doing right now is really very smart. And I think it's going to ensure in the long run that, we are seeing a little bit of a period of cooling down. I mean, I can feel that here in Germany as well. I just talked yesterday to a friend who's trying to sell his car. And it's not like a super fancy, pricey car, just a normal family car. And he said, like, I don't know, I cannot find a buyer at the moment. Like, if you go back like 2 years, that was not the case. Like used cars were selling for crazy prices back then. It's not the case anymore. I can see like automobile manufacturers like BMW, like Audi, Mercedes, they are offering huge discounts for cars. So there is a cooling down for sure, because there was maybe an overproduction or something. But just because there's a cooling down phase, which of course affects also primary an economy like the US economy, which is like highly dependent on on consumptions by private households, let's put it like this. But that doesn't mean, there's going to be a recession. So
No, I mean, isn't this what the Fed wanted though? Like they did increase interest rates because they wanted the economy to slow down, and now we're probably going to see the ebb and flow that's going on in the financial world and in global economics. And then now with the Fed lowering interest rates, you'll see probably it lagging maybe 3, 4, 5, or even 6 months behind. So you'll see that the economy is going to slow down, maybe going on the brink of a recession. But I don't think it's not going to allow itself to go into recession, because it has, in the background, everyone knows that, better times are coming because the interest rates are now being lowered. So it's lagging behind, right? And, we looking at S&P 500, if I would love to look at my screen here quickly, is look at Bitcoin.
Let me share.
So we have so this right here is we look at Bitcoin, right? And I don't know what's up with me today.
Getting the flu, maybe, man.
Hopefully not. I'm going on a quick on a weekend trip tomorrow, so hopefully I'm not getting a cold. But we have the S&P 500 right here, and we broke out yesterday. We had a close above all-time highs, something like that. Now, what I'm expecting here for the S&P 500 is to pull back and retest this area, maybe come a bit lower. Would make sense for that to also. But from a technical perspective, I'm looking at perhaps maybe even something like this if we're going to continue to the upside. And if I'm expecting that from the S&P 500, then obviously naturally I'm also expecting some sort of pullback from Bitcoin. And it so happens that Bitcoin has broken above a significant resistance area right here, which I could, you could also argue that this might actually be the range EQ. So if you put
Yeah,
a range,
it is. No.
yeah, so that's the middle of the range. We reclaim that one. We're still in an overall daily downtrend, but it's sort of like more neutral now. When we had when we looked at this a few weeks ago, we were trading, I believe, maybe somewhere here. And obviously, looking at this right here, this is a downtrend. It is a overall range with bearish characteristics. But what happens here is important because we come down here and we form a double bottom on the daily. So now we have something like this, right?
That's exactly the point. No, we didn't have like the lower low. This time we had a double bottom. I think this
exactly
can indicate a change in market structure.
Yeah, and so what I'm looking at for Bitcoin, so when I'm going to do my weekend market scanning, I'm obviously going to be looking for this, right? And to give you guys an idea of what I'm looking at for my trading is I'm looking for a pullback, a retrace, not a pullback. A pullback happens in a downtrend. Retraces happen in an uptrend. You gotta remember, it's important.
We understood you anyway, so don't worry.
Yeah. So down here, and that's where I'm looking for a bounce. So what I'm gonna do is I'm gonna put an alert right here, okay? And that alert, I'm gonna ride. In that alert, I'm gonna say BTC. So BTC entering zone of interest, okay? And at that point, when I get that alert, I'll go into the 4-hour. And what I'm looking at on the 4-hour is simply some type of bullish break of market structure. And if I'm choosing to buy spot here, I'm not going to obviously have a stop loss or a TP or whatever. But if I'm looking to trade this, I'm looking at a trade that looks like this. Now you could, depending on where the high is, could be 1 hour, but I'm actually just looking for half an hour. So I'm just looking for a move up to that level. So this is the trade I'm looking at on Bitcoin. You might look at this and say, well, why is your TP lower than your stop loss? Well, because it gives me a lot of room for error. So I might actually be able to, close the trade if we get something like this, and I'm going to close the trade here. And you know what? Interestingly enough, I've started the backtesting session on this idea that I just showed you on Euro USD. And the results are actually quite amazing. Let's see, I wrote the results up here somewhere. Yeah, so I backtested this for 2024 on Euro USD. So it's a daily and the 4-hour time frames. I had 18 trades with a 78% win rate and a 10R return with 10R return with only a 1.75R drawdown.
Okay, nice.
Which is obviously very good. Now, I think there's some flaws in that back testing because it's a discretionary, but I'm going to continue testing it on all the majors and go back a couple of years. But it's so far it has very, very good very good numbers, very, very good numbers. And it's such a simple process. You add daily levels. Here's a daily level. And then you look for price to like break and retest that daily level. When it hits that daily level, you look for confirmation on the 4-hour, and then you just look for a small move. So very quite a simple way of trading, and I think I think that's the key. That's really the key to be. Pin the market says your Euro USD backtesting result is what I really do want to see. I mean, I do have the result in my Discord, the Discord channel. If you're not in there, I think it's in the link, maybe in the description here.
Yeah, and your Discord not, I think, but link to your YouTube channel, obviously. And so you might want to go there and check it out. And
definitely
like, subscribe, comment.
And I'm also live on my YouTube channel, so I think it's going to be in that description.
This comment comes from your channel anyway, so
nice. All right, so hope you're in. Hope you're in there. If you're on my YouTube, you should be in the community. Otherwise, I don't know what you're doing with your life.
What are you doing with your life? So one thing I would like, I'm not trading. Oh, that's good. Something good to do with your life. I would like to add 1 or 2 things to what you just said. So if you remember, I think 2 weeks ago it was when we last were streaming together, and we were kind of here somewhere, and we said, okay, the most likely things to do now, what we are looking for is actually that we are going to see either a double bottom or a lower low. In this case, we didn't see the lower low. We saw more of a double bottom, which for me is an indication that we could see a change in market structure. And we reconquered here, at least for the moment, the bull market support bands, although we need to be a little bit cautious there still, in my opinion, because last time we were deflected also here. So it's not we are not, let's say, out of the bear market yet, out of this mini bear market we've seen for large parts of this year now, since pretty much March. But still, in order to really change this structure and to go into a new market structure, for example, in bull market, what we need to see is a new higher high. And this new higher high really would need to be above our all-time high, so above this one here. So we talk until we are not seeing prices around 74 or 75,000 US dollars. I don't think we can say already, oh, we have a fundamental change in market structure. Then maybe we have a mini bull market in a mini bear market, or we are continuing this large sideways market. I mean, you could also say, well, this is not a bear market we are seeing. This is just a prolonged sideways range, This is where technical analysis becomes always an art and not science, so to say. So for me, that has nothing changed. However, what has changed is really the fundamental picture, with the interest rates coming down. And interest rates coming down, no matter if we see now first declining stock markets for a couple of weeks, means that liquidity in US dollar is going out of US Treasury bonds. And of course, it has to go somewhere. And this is usually then the stock markets, risk on assets. If the stock market goes up, you can be sure that Bitcoin is going up as well, especially since now it's perceived as or it's on the radar for institutional investors. And this also, it fits almost too well into what I've been saying here on the logarithmic regression chart, that between or after the halving, it takes Bitcoin usually between 190 to 300 days to really enter this bull market frenzy. If it's 190 days after the last halving, we are talking about end of October, where we leave the green channel. That would mean prices well above 100,000 already, by the way. If it's if it's more like 300 days or more like 2016, we would talk about February of 2025. So, it's really exciting times in my opinion to come up now. Also, that September normally is not a good month for Bitcoin. We looked at that, I think, last week and 2 weeks ago as well, that on average in September, it's the worst of the 12 months historically for Bitcoin. We see the price decline of, I think, 4.5% or something. Well, up to now, we are seeing something different. So that makes me very, very optimistic for what is to come. Now, always, don't FOMO into the market, but act with a little bit of caution. If you think you are late to the game already, well, first of all, you are not. However, that doesn't mean that you should throw all your money exactly at this moment into it. Spread it out, DCA, maybe over the next days, weeks, and months into Bitcoin. Because if we are seeing the upside that I'm expecting next year prices above 150, maybe even above $200,000. It's still a very good upside, even if you go in at 70 or 80,000 US dollars. But be aware always there's going to be a lot of volatility. I don't think your picture very much has changed on this as well, right?
No, I mean, 150, 200,000 per Bitcoin is a price that, according to the layout and the chart that we're looking at right now, makes complete sense. I am, of course, watching the current structure of the market and thinking that it's not bullish. I mean, if I would be looking at this in the Forex market, I would say that we're looking at distribution.
Yeah.
And we're going to break down. And to me, from a Forex perspective, it's obvious that this is now a distribution range. I would bet for a breakdown, and I would prepare for a break and retest of the lows. Now, this is not the Forex market. The Forex market is designed to be efficient. It's designed to not move 200% up and down. It's, Bitcoin on the other hand is designed to move up. I mean, I don't know how to explain it clearly. It's a risk asset that is by nature, because of the fundamentals and because of the deflationary nature of Bitcoin, it is designed to become more valuable over time. Now, of course, the value of Bitcoin is created by us, by our expectations of the future. Like, Bitcoin doesn't have any magical properties to put a value on itself. It's us as humans who decide what the value of Bitcoin should be. If you look at the fundamentals of Bitcoin, you could say, though, that it should be more valuable in the future if nothing changes. The only thing that's going to change in the future of Bitcoin is the fact that there's going to be less Bitcoin in circulation, and it's becoming less and less with every halving or every day, really. And looking at that, and then you compare that to fiat currencies, where you have basically the Fed share sitting and saying like, oh yeah, we print money digitally. We basically just push a button, and then we have created trillions or millions of more dollars to pump into the economy. That's not going to be possible with Bitcoin. And that's the fundamental reason I believe that Bitcoin right now is at the price where it's at, because it's a true contender to the fiat currencies. Now, we might see that in 5 years or 10 years. Well, let's say 5 years, we might have quantum computer combined with AI technology being able to crack certain algorithms that creates the what's that called? When you
the
encryption, encryption.
256 encryption Bitcoin. That's
exactly.
possible
So
to be cracked then, but like I always say, if you are able to crack that with a quantum computer, you're going after the fiat money first.
Oh yeah, definitely.
After
Definitely.
Bitcoin. So your fiat money account would be more in danger.
Yeah, it would. And also, like, if you go after Bitcoin with that, and you try to hack people's wallets and you try to get people's Bitcoin. Now, why are you doing that? Well, obviously because you're doing that because you want to sell Bitcoin to fiat. Now, as soon as that happens, the value of Bitcoin is going to drop immensely. Okay, because the whole security of Bitcoin is going to disappear. So if that happens, the value of Bitcoin drops massively. So the people that are going to try this out are not going to make any money from Bitcoin. So of course they're going to look at the fiat industry first, and that's not going to be as obvious. So I think the dangers to Bitcoin is also a true danger to society as a whole. I can't see Bitcoin failing without most of the financial system failing as a whole. I can, however, see fiat failing without Bitcoin failing. We can see a second round of the financial crash of 2008. Okay, if we have a second version of 2008, that's going to hurt fiat economy. And I remember, Bitcoin was created from the rubble of 2008. Yeah. Exactly. That was what Bitcoin was created as a asset to really make sure that we have something that won't get affected by that. Now, Bitcoin, the price of Bitcoin will drop if we get a second version of that, but it's probably going to recover quicker than the fiat institutions are going to do. So I think there's massive value here. There's massive value in Bitcoin. And I mean, if we break above that 74K, if Bitcoin breaks into new all-time highs from this range here, then and I think that will happen. Now with the current situation that we have, I think we're gonna continue higher. I think we're gonna break out. If that happens, it's just gonna be incredible. Honestly, if that happens, we're gonna see 150, 200K Bitcoin. I don't see a reason why we wouldn't see that.
And we will see it very fast. That is like what happens in between in this bull market frenzy here. So the space between the green and red channel here, that is always very fast. Once we enter there, I mean, we're talking about here in bull market, 17 bull market until we reached the peak. That was 200 days. I mean, that's not a long time. No, last time this happens, if we just count the first top here, we made this within 130 or 120 days. So we're talking here about just like 4 months, which is nothing. It's 4.5 months or something like this. So it will move very fast, very likely. I just remembered, by the way, when you said like Bitcoin comes from the rubble of a 2008 financial crisis, banking crisis. Wasn't there, like, in the first ever mined Bitcoin block, also something imprinted, like a headline from the Financial Times back then, like British banks on bailing out for the second time or something like this? I cannot like precisely remember it, but yeah, it comes for a reason, and it has been created also probably because we just had stuff like where the government takes away money from people's bank account. I mean, if you were of Greek nationality and you had substantial money post 2008, at a point the Greek government took it all away except 100,000 euros, which is.
So just to confirm here. So the first block, the very first Genesis block of Bitcoin was signed by Satoshi Nakamoto on January the 3rd, 2009. And just like I said, it says the Times, an article from the Times from 2009 says that Chancellor on brink of second bailout for the banks.
See?
And it's a very, very powerful statement. Like it's almost like I'm getting chills. This was done in 2009 after the financial crisis. And it's just that on the very first block is just, and then it just took over. It just exploded, and it just took over the whole financial world almost after that. It's such a powerful statement. That is one sentence, and it's not even Satoshi Nakamoto telling us something. It's just a headline. It's just a headline from the Times, and it tells us everything we need to know about Bitcoin.
It's just a statement, that the statement itself tells you already everything you need to know.
Yeah, it's
beautiful.
It's
really
beautiful.
Really poetry. Yeah, that's a good way to describe it. Yeah. And I mean, we see also, and maybe this as a last thing for a more philosophical discussion about Bitcoin. We see like new things coming in also every cycle, every 4 years. In the beginning, I can still remember I was interested in it in I think 2011 already, but it was more a nerdy thing, and I was never that tech savvy, so I gave up on it. Then you had like kind of a second wave where the more risky people came in. Then you had a third wave where slowly the bankers, the old-fashioned bankers like me in 2017 came to the realization, hey, maybe that's something you should have in your portfolio as well. It cannot hurt, looks pretty good. And once you start understanding the fundamentals of what a decentralized network can do for the world, in terms of being censorship resistant, you start seeing the value in it. Now we have corporations coming in slowly. Institutional investors. We are for sure going to see Bitcoin on the balance sheet of companies as well. We have the first countries coming in having Bitcoin as a legal tender. Look at El Salvador, for example. It's quite a success story there. And this is going to continue, in my opinion, and slowly but steady, this will be reflected also within the price of Bitcoin. All right, good. I would like to switch over, talk a little bit about my trading results, at least from the automated part of it. Has been a very exciting week. Last week, I switched the automatic strategy for my what is it called, market equilibrium indicator, to a multi-currency bot. And this bot is currently trading Bitcoin on the 50-minute chart, Popcat, ADA, Dogecoin, and Ripple on 2-minute charts. And every time we get a signal here, a sell or buy signal, it's going to engage in a position. And this bot is very interesting, was up by almost 10% within 2.5 weeks already. Nice. So on the 10K account, we were up almost 1,000. And then the interest rate decision came and put it really, really to a test. So we saw a bit of a drawdown period then. So currently we are only up $574, which is, at the one hand, of course, it's like, this was a little bit a black swan day for the indicator. And I want to talk in a while also about why the indicator reacted in the way that it reacted. But for me, I was waiting for a stress test like this, where really prices just go into one direction, where a fundamental shift in what the market is perceiving and in terms of risk is going to change the whole narrative of risk on assets. And this is what we saw here. And I think the system handled it quite good, just giving away roughly, what is that, $425 of $1,000 we earned so far in, what was like, I think like almost 3 weeks we are trading this. The results still very, very good. We have a profit factor of 1.62. As I said, anything above a 1 is already good. Anything above 1.5 is excellent. If you manage to be over 2, it's like probably people are going to look twice then, because this is very, very rare. We are seeing 64% of the trades being profitable, and we are down 137 trades now as well. For me, like once you hit 100 trades, this is kind of where statistics in trading slowly become significant. Where you can say like, okay, this is a decent amount of trade already, especially in a volatile market. It seems like the underlying logic of the system is quite robust, which is the case. However, when you see a fundamental shift within the market, any indicator out there, especially my indicator, which is more of a contrarian indicator, is going to have its difficulties. And you can see this very well on what happened here, for example, with PopCat. So after the interest rate decision, we saw, for example, PopCat dramatically going up all the way here from 68 cents to what was it now in the top 96 cents. So we're talking about like a 40% move to the upside here. And these times, also my indicator has a hard time adapting at first. You can see here, it says like, hey, we are too high, we are too high. You need to sell, which I did, every single time I sold. And then once the market recalibrates itself and finds its new range, you see it, then it starts working better again. And I was actually really the last weeks waiting for something like this to happen, because I wanted my risk management strategy to be put to the test. As you guys know or not know, I'm not working with a traditional stop loss and take profit strategy here. So I'm retesting the system. Every time there's a sell signal, you sell. If there's a buy signal, you close all the short positions and you switch to a long position. And how do I offset risk, or how do I try to offset risk here? By having a very low trade size. So since I switched to a multi-currency bot here, trading 5 cryptocurrencies, I'm only trading $250 per signal. So every time there's a buy signal, a position of long 250 is open. Second buy signal, it's adding 250. Short signal, closing the 500, opening 250 as a short signal. And I mean, I move up by 40% within just a couple of hours, actually. That is really a stress test already. So I'm really, really quite happy to see, yeah, man, it's working. It's still losing money in a period like this, but I think that's normal. If you're not like a trend follower, like your system probably worked very well within a setting like this, Jonatan, as a trend following system, as like a more system or strategy that tries to capitalize on ranging markets, this is what you not want to see. But on the other hand, it's good to see that the mechanisms that handle risk are in place and are effective. Because we are just talking here about a drawdown of, what was it, like 4%, which is not a lot. This is within what you can expect. Yeah, then I set up also this week a bot trading, like ultra, let's say, ultra aggressive. This one is also trading PopCat, ADA, Dogecoin, and Cardano and Ripple, but on Heikin Ashi chart. So I made a video actually this week on my channel where I walk you through the process, how you can set up a robot with my indicator or any indicator you want, with trading view alerts being then transferred to a software called Wunder Trading, and then automatically executed on your account. And with the Heikin Ashi charts instead of candle charts, this is a very, very aggressive trading strategy. You can see how often signals trigger. And I'm trying at the moment what happens if you really just also here trade all the signals. Every time there's a buy signal, you add 250 to the position. Every time there's a sell signal, you switch the position and add on further signals too. I want to let this trade for a while, and then I'm of course going to share also probably next week already the results with you. However, I want to get to the point where we are talking about a statistically significant number of trades, because I don't want you guys to copy something like this where I myself am not sure is this really working. Something else with the one I just showed you that is more conservative. This one is highly, highly aggressive. But if it works, it's going to also majorly pay off. Yeah. And by the way, if you want to try out my indicator, there's an offer which you can find in the description of the video where you can get 75% off for your first month. So you can test it for a month for free and see if it's something that works for trading for you as well. Alrighty.
Yeah, highly recommend. I've been looking at that indicator as well, and I think it's a very interesting indicator for sure. It's actually very interesting because if we switch over to, so I'm looking at a PopCat here with the indicator, and this is on the 5 minutes. You see that you have particularly two very good signals right here. This is also a very good signal, even though it would probably have been a loser. What I do see, which is very interesting, if I add your indicator here, it's gonna show me one sell signal here.
It's on the 5 minute.
Very top
you can
here.
see like the differences also on the 2 minute and 5 minute.
Interesting.
But I really had to think of you this week. I thought, I think this is like exactly the move where Jonatan's RLZ strategy really would thrive and give you a lot of profits.
Yeah, if you go back to that signal right there, it's you can see that it's, I wouldn't say it's perfect, but it's definitely good enough, because it does come down and hit that 50. And the way I like to look at these trades is I'm not always going to use the stop loss that is with the indicator. I'm probably going to add it a little bit below the reload zone. But what we can do in this case is, this is on the 5 minute, right? So we can go to first the daily. Of course, PopCat has
there's not so much daily candles to look at yet, I think. PopCat.
Okay, so let's go to the 4 hour. So we got the 4 hour here, and that's
sorry to interrupt. Just to make that clear, like PopCat is like nothing I would hold on long term to. This is really just something I'm trading because its moves really violent and volatile, and there's a lot of liquidity in it. Other than that, it's of course nothing I would touch, and long term it's going to zero, as any meme coin out there.
Yeah, that's looking at the 4 hour here. This is on the 5 minute looks good. On the 4 hour, not very good, because it has a massive move to the upside, and you probably don't want to long this. But if I would decide to go long here on a very volatile altcoin like this, and we select the highs here, you see that aligns quite nicely with that high up there. So if I decided to enter on the 5 minute and anticipate a big move like you can easily get on a volatile asset like this one, we could be looking at an entry here with our TP either all the way up here, where I'm going to front run that probably and put it somewhere in this area. And then if you want a wider stop loss, you can put it below the low here. Still a pretty good trade. And then you'll see here where it starts a trend here. So it's breakout. Now, the way I would manage this is probably when we broke that one, if you're sure that you want to take profit up here, what I would do in this case when we broke out is I would put my stops here at entry, like right above entry right here. And you'll see soon we have, let's see. Yeah, so you would have probably hit TP soon, but you're going to get another signal here. So you're in this trade, and this is now pretty much a free position, right? This is a free position, and you get another signal. What I would do is I would enter on the retest of the 20 EMA, stop loss below the reload zone, and I would select the same TP here. So now you have this one, which is just a free trade. You're not going to lose any money on this one. You're actually going to make money on this one, because what I want to do now is the stop loss that I have here, I'm going to move that up here. So you'll make 0.66 R on this trade, and you lose 1 R on this one, which means you're down only 0.4 R if this one hits stop loss. So let's see, you get filled on that one, and then it moves up to TP. So what you've done here is you've done almost 2 R on that one, and 1 R, about 1 R on that one. So this is together 3 R trade right here. So when you catch a move like this, it can really, really perform very, very well. Same thing with this signal here, because you see that this is also a break and retest of a significant area right here. And then you have that signal right there. Now, I don't think I would market enter here. And I don't think this trade is going to get filled. But I would probably wait for a small pullback down here. And then look for that move up to this level. Now, I don't think I'm going to get filled here. Yeah, as you can see, it just continues. But you can see that it does catch some of the break and retest in the trend very nicely. And if you look at Popcat on the 1 minute, we can remove all of this. We go to the 1 minute and we look at this last up move on the 1 minute. You'll see that there's going to be a bunch of long signals all throughout this uptrend right here. Now it takes a while for it to load, so there we go. On this trend up here, there's just so many signals right here, because you see that on the 1 minute, the trend is so clear.
Yeah.
That you have this trending structure right here, and just keeps printing those long signals. So if traded in the ranging market in the right way, this can be very, very profitable. However, I cannot automate the signals here, so I'm not able to. I mean, maybe, but it's just a lot of these signals are not good. When the market is ranging, it's useless basically. So
you also don't have to automate everything. It's an experiment, because of the audience, my community members obviously ask for it, which I understand. But as I use this mainly for Forex options, or a variation of this, which is a bit more complex than the indicator, honestly speaking, but cannot be translated into TradingView Pine script code so well. I'm also not trading like every signal on there. By the end of the day, it's something that's supposed to help you noticing there is something to look at the moment. There's something going on price action wise, or whatever on this chart. Have a look if it's a valid entry signal or not. One question here I would like to answer very quickly from Marco. Hello, but when there are a lot of more sell signals than buy signals, for example, the short position will grow up, and in a rising market, that could be a problem. How do you handle it? So what I do here, let me quickly switch over, is that let's say we have those 2 short signals here that we had on Doge. So I would have 2 short positions here. Once the first buy signal triggers, I'm completely closing the short. So I'm closing 2, not 1 short trade, but both short trades. And the same here in Popcat, and this is why we saw the drawdown here. All these short trades were closed on the first buy trade here. I hope that answers your question. Good, back to your chart.
So we got a question here saying how to spot swing setups with this indicator, and it's pretty much the same. You look at the 4-hour, for example, and you can look at let's see if we get a decent signal to understand which are the best signals. And by the way, this indicator is now included with the RLZ exclusive membership that I got going on. So for those who don't know about the RLZ exclusive, I'm doing 3 private workshop live streams every week, and I share almost daily daily videos within the community, and you get free access to this indicator within the community. You also get access to three different courses, and it's just very a lot of value. It's $49 a month, but you get everything that I have basically in that membership, along with personalized help and personal guidance. With the sole purpose with the whole community is try to help people get funded in the forex market and in crypto as well, if you find a firm that can help you with that. So let's see that signal right there. So the whole idea is to trade with this indicator, you have to understand market structure. You cannot take a signal that does not align with the break and retest of market structure. So here, this could be a good signal, because here you have a level here where price first breaks down, and then it forms I wouldn't say that this is a perfect signal, but if you're looking to trade this break and retest here, then I would say that that's a pretty good signal. And usually the way I would trade this is I would enter on the candle close here, because it already had a good rejection here. Stops would go above the reload zone, and TP at the lows right here, and that would look like that. Now let's see if we get another signal here. We can show you if it's a good signal. This one here, the big wick right here, is this a good signal? No, this is not a good signal, because it's showing a different market structure now. I'm going to tell you why. Because now we're seeing this. So we have equal highs here. And we want to make sure that when we actually take a trade here, it should be within the trend, so lower high. And you also see like you have a potential support here. So if you do go short on that setup, you have to have stops all the way up here, and then you have to have TP here, which is not, it's not really good risk to reward. And I mean, it's going to work, but now you see that you're forming a bottom here. Now you have like a double bottom on the 4 hours. So it's interesting that you can almost predict things like this happening with a change of structure. That the first clue of a change in behavior of the downtrend was that double top right here, which also resulted in a double bottom here. So yeah, interesting example on why you really need to pay attention to market structure in these horizontal levels if you're going to be trading an indicator like this profitably. Yeah, but I think that's it. I think that's everything I wanted to show with the indicator here today. I have, we got the indicator. We have my plan on Bitcoin as well here to go long if we come down and retest that level. So I think yeah, I mean, I think I got the plan for Bitcoin moving forward. And
we got the plan moving forward. And of course, next week we are going to go back onto our plan and talk about again if these trades were executed, if it worked out, if they didn't work out, why didn't they work out, how did we handle risk, and so on and so forth. As always, I'm seeing we've been online also for almost an hour, so maybe we should slowly come to an end. What do you think?
Yeah, I think that's good. I think that's a good idea.
I think so too. Yeah, guys, if you haven't done so already, you just heard the man, Jonatan. I think for the price tag, Jonatan's indicator and whole trading course comes as really a bargain. And I mean, the difference here for both of us is we are real traders. We earn our money with that. And we are not wannabes that only show, the nice numbers when things are going good. As I showed you, for example, the last 2 days, not very good for me, at least on the short time frames. So really give it a shot with Jonatan's course. I think you can greatly benefit, especially if you're a beginner, also if you're more advanced already, from the concepts and not only from the indicator itself. I think even more value really in the educational part that you offer alongside your indicator. Thanks for being with us here this week. Jonatan, thanks for joining once again as well. And yeah, let's see where we are next week, what's going to be hip and in the spot of the markets next week. Until then, all there is to say is always remember